Hi, thanks for joining me in my market report. My name is Mike, and this market report is on mortgage rates. We kind of like to get into what's driving mortgage rates on a daily basis, whether if it's economic reports that came out or if it's headline news. What's impacting them on that basis, and if they're going upwards or downwards or sideways. We stay away from the rate quotes because there's just too many variables that go into a rate quote, and so there's plenty of websites out there. But if you guys need a rate quote, we could certainly help you out with that. A little bit about myself is that I am a loan officer. I do work with the national lender. We can handle rate quotes or answer any questions regards to the mortgage programs out there or pre-approvals if you need a pre-approval, and the financing for the purchase or refinance if you want some numbers kind of run and see if it might make sense for you, or create some different ideas of what we could do to help you provide some solutions for some things that maybe you got going on. Uh, maybe you got some kids going to college and need extra money for that to help them to finance their college education, or if you're looking at some early retirement plans, we could certainly look at those, or divorce situations, God forbid. But anyways, just go ahead and reach out. The social media site that you found us on, just go ahead and reach out. We'll connect, and then we can talk a little bit about your specific scenario. And so, without further ado, why don't we just jump right into this report? We'll start with the economic data for today. We got a lot here, as you can see, with these highlighted areas. We'll start with the Q2 employment costs for second quarter. So the previous quarter was at 0.9%. The first quarter forecast was calling for 0.9% for the second quarter, and it dipped a little bit down to 0.7%. So this is important primarily because this can be a wage-based inflation. So this can be another indicator for inflation. So this coming a little bit sharp helps out inflation. Now we got personal income for the month of June. So May it dropped 0.2%. Forecast is calling for a drop of 0.3%. However, it did go in positive territory at 1.1, but barely. So people made slightly more than what they were thinking. June also we got here's the big one. This is the Fed that the Fed this is the Fed favorite gauge for inflation. This is the PCE, or personal consumption expenditure. They look at really the core, which is when you strip out food and energy. But this is the headline news right here, month over month. So 0.4% back in the previous month of May, it went from month over month, grew 0.4%. In June, it went month over month at 5%, or 0.5%. Now it's year over year went from 3.9% to 4% in June. So not a huge uptick, but enough there. We're going to get back to this one, but here's the core. This is where you strip it out. Um, Food and energy, because there are variables you just don't have any control over. And the May's, yeah, I'm sorry, the June's number came in at, I'm sorry, the May's number came in at 0.5%. Forecast was calling for 0.6% for June, and it came in at 0.4%. Now its year over year also kind of very little. Went from 3.4% with expectations at 3.7, came in at 3.5%. So that's good news that it didn't have as big of a spike as what they're forecasting. However, it's still a little higher than where we like it to be. We like to keep it closer to like 2%. But again, the Fed is saying it's transitory. We're hoping that the bottleneck, once we get through this bottleneck in the supply chain, things will get back to normal and stabilize, and then we'll see that start coming down again. Let's go back to this consumer spending for the month of June. So May was basically nil. There was no spending in May. However, forecasts come for a 0.7% increase in June, and it came in a little hotter at 1%. Now, Chicago PMI, this is kind of the business activity around the Chicago region. We had a 66.1 in the month of June. Forecast was coming at 64.6, and it came in much hotter at 73.4. So very good news in Chicago region. Things spiked in the month of July. And last but not least, we got the consumer sentiment. We had an 80.8. Forecast is coming for that same level here, and people are feeling a little bit better in July at 81.2. So good news right there. Let's jump ahead here to the headline news. Stocks are down. The data was decent, so that was kind of good news. However, we do got corporate earnings reports. Sometimes good news is bad news for stocks, but also corporate earnings. So we had Amazon coming in disappointing numbers. They missed on their sales. It was still very good numbers, but however, it wasn't good enough for investors. So they're kind of disappointing on that as well. And as well as so kind of looking at increasing their concerns over the Delta variant as we see more and more cases coming in, and then more news releases coming out from memos from CDC why they reversed their mask mandate policies and reasons behind it. It sounds like it could be it's easily transmittable as like a chickenpox from person that's fully vaccinated to who's and those who are not vaccinated. So there is they think it could really spread much more rapidly. So in any case, there is some growing concern over the Delta variant placed in the U.S. Let's move ahead, see how this is impacting mortgage rates. And mortgage rates are up a bit. We're up about 6 basis points where we left off yesterday, but in the same range. So again, we didn't have enough to make a change in pricing yesterday, and then same thing for today. So our pricing should be pretty much the same as what we've seen the last couple of days in that same range. So you shouldn't really notice any price changes or any in the rates or anything in terms of pricing for mortgage rates. So again, we'll see another day for unchanged. But again, we gotta watch these little wicks here for 2 days here. Sometimes when we get those, that means we get a little bit of a reversal, so we could trend downwards here. So be cautious here. Treasuries came down, so that's also good news. That kind of helped us out. We're just under the 1.24 level at 1.236, and we're just below this technical level that we've been trying to get back under again. And we'll see how long we can stay under there. All right, folks. Have a great rest of your day. If you guys got any questions, please feel free to reach out. If you guys like these videos, we greatly appreciate if you smash that like button. That certainly helps out our channel. And we appreciate you guys. And thanks so much for watching. Enjoy the weekend. We'll see you on Monday's next video. Bye-bye.